Negative moves. Why the re-emergence of positive moves?
James, it does look like the good lead that we've seen from US markets as well as European markets have been enough to boost all markets around the region. Our market up by 0.8%, a very strong performance, and it's nice to see about $4.2 billion worth of stock going through the market today. If we have a look at our market, we saw green all across the board with the exception of just 3 sectors, and that tells us a story in itself. The sectors which lost ground were the telecom, utilities and information technology sectors, and these sectors are often thought of as defensive because they are high yielding and they do tend to do well when the market isn't performing so well. So it does look like a bit of a shift from those defensive areas into the cyclical sectors is continuing. If we have a look at the top 20 blue chips on the market, we actually only saw 2 of those declining, so it was a good day across the market. Woolworths, CSL, QBE, these were outperformers. All 3 of these stocks managed gains of more than 2%. And some pretty big moves on the market today. An interesting one was 7 West Media up a massive 8.5%. Now, no news was released by the company, but of course there's been a lot of talk about My Kitchen Rules and the number of eyeballs it's been getting each night. So it does look like some strong momentum coming through in 7 West Media stocks. And another stock doing well today is Atlas Iron, up by 6.4%. Yesterday it increased reserves by around about 21%, and brokers really getting behind the story there. So all in all, a great day supported by some strong earnings coming through from the US as well as European markets.
David mentioned the retail sales numbers that we got out. Later in the show, we're going to go to a bit more detail in regards to the actual figures. What I thought was interesting in the reaction of some of the retail stocks. I mean, you've got the likes of David Jones up over 3.5%, JB Hi-Fi up over 5%, Myer did pretty well, up about 1.5%. It did well yesterday, and that is despite a disappointing figure.
Overall, the numbers were disappointing, so we've now seen a 0.2% decline in both November as well as in December. But if we drill down into the numbers, they tell us a little bit of a story. The biggest losses were in the retailing space, which was down by 2.6%, and cafes, which was down by about 1.1%. But the biggest rises was in the clothing, footwear, accessories space, where we did see a rise of 2.1%. So that's good news for discretionary retailers, and also department stores managed a rise of 0.8%. So for a lot of these discretionary retailers, the retail sales numbers, while the headline number was quite negative, when you drill down into the numbers, it was quite positive for these discretionary retailers. So some pretty big movements. We saw JB Hi-Fi up by 5.1%. The Reject Shop was up by 4.4%. We saw David Jones up by 3.7%, and also Pacific Brands gaining 3.6%. So some massive moves on the market. And really, that's been a story that's been happening for a while now. We have seen these cyclical stocks very much in favour. In fact, since the start of the year, we've seen that consumer discretionary space, which includes those cyclical media stocks as well as the discretionary retailers, up by around about 9.1%, making it the second best sector on the market this year so far.
Has the tide turned in regards sentiment, Julia, to the retailers? I mean, you go back last year and, you know, you couldn't give them away, some of the big guys. Have we seen the revival? Have we turned the corner?
I guess in terms of cyclical, well, there's 2 things for the retailers at the moment. One of the cyclical challenges that they're facing, and one of the structural. The structural challenges are still there, so they're still trying to deal with competition on the internet and really getting sales increasing through that internet avenue. But on the other side, the cyclical issues seem to be turning in its favour. I guess the view of the market is that we are seeing a bottom in terms of retail sales. Recently, in the last couple of quarters, we have seen some stabilisation in some of the retail results that we have been seeing through from the likes of Myer as well as David Jones. So a bit of stabilisation after quite a few quarters of like-for-like losses. So that's been seen as a positive for the retailers, and with the interest rate cuts flowing through and the effects of the interest rate cuts, hopefully we do see a more positive cyclical environment. The structural challenges are still there, but I think what the market is really reacting to is the possibility that the cyclical environment is improving for retailers.
Do you think there's about some $470 million? A couple of issues going on there. One in particular, the ongoing strength of the Aussie dollar, and yet shares actually up about 0.5% for the stock.
I guess not too much of a surprise to the market, given that we know that the strength of the Aussie dollar, as well as the problems, I guess, in this steel sector. If we have a look at Arium, it's a $474 million write-down. It doesn't affect the operations. It's a non-cash value, and I guess it's in terms of goodwills related to both their manufacturing business as well as the distribution business. So it really comes from Arc Steel as well as the Australian tube business. So if we have a look at Arium, still there's a bit of uncertainty in the stock, and that's really because the company hasn't given a guidance for the full year because of the volatility that we've been seeing in underlying iron ore prices. Earnings is expected to be skewed to the second half. That's both in terms of volumes as well as the prices that they receive for their products. But altogether, I guess not too big a surprise, given that we have seen a number of write-downs in this area from other companies, and the stock actually up by 0.5% on the day, underperforming the market, but still not too bad a performance.
Look, as mentioned, the Aussie dollar, an issue for them, as it has been for quite some time, I suppose. For those people out there looking to maybe play to the Aussie dollar, looking to take advantage of it, I mean, are there stocks out there that you like, that people can look at to try and play the strong currency game?
I guess if you have a look at it in terms of the Aussie dollar, well, traditionally it's the importers that tend to be the winners and the exporters that tend to be the losers. The manufacturers who are looking at exporting their products or trying to compete with more cheaply imported products are the losers. And when Arium was purely a steel producer, the high Aussie dollar was a very strong issue for them. However, now they've diversified into the iron ore space, and usually the Aussie dollar tends to move with commodity prices, and that is, if the Aussie dollar moves higher, then usually the iron ore price is moving higher as well. So they tend to offset each other, and it's not as big as an effect. I think one of the things for Arium is that its actual mine life isn't very long, so it really does need to make some investments in this area to continue in that iron ore game. If we have a look at prices at the moment, the cost of producing its iron ore and getting it out of the ground is actually quite high compared to the likes of BHP and Rio Tinto as well as Fortescue. So Arium's still a relatively high cost producer in this area, and also a relatively short mine life. So I think it does have some issues that it does need to deal with in the next couple of years to be a sustainable iron ore miner. But for the time being, just trying to deal with some of those legacy issues from its manufacturing and distribution business.
David